In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Slack attack. The popular messaging software maker spikes well above its reference price on its first day as a public company. Plus, trade war woes. Apple makes a plea to the White House saying new tariffs will dent the company's contribution to the U.S. economy. And Facebook's splashy reveal of its digital coin has sparked regulators and lawmakers in Washington to take action. We'll hear from the senator who spoke out first. But first, to our top story, another unicorn hits the public market. Workplace messenger Slack soaring in its trading debut. After foregoing a traditional IPO for a direct listing, the company's shares opened at $38.50, 48% above its reference price, and at one point climbed as high as $42 a share. It came back down, closing the day with a market cap of $19.5 billion, more than double its last valuation on the private markets. Slack's listing makes it one of the most valuable companies to hit the U.S. market this year, but will it be able to avoid the slump that's plagued Uber and Lyft, both trading below their IPO prices? Joining us to discuss, Andreessen Horowitz board partner Steven Sinofsky and Bloomberg's Ellen Hewitt. Andreessen Horowitz is an investor in Slack. And Steven, you worked at Microsoft for more than 2 decades, which of course is a Slack competitor and one of Slack's biggest competitors with deep pockets and a ton of users. So can Slack fend off the big guys?
Well, this one might be more of a question of, can Microsoft fend off Slack? Right now in the way that industry leaders have talked about, Slack is generally viewed as the leader, certainly by a bunch of the measures in 10 million daily active users, monthly active users, and so on. So I think they're in a really great position. The industry is undergoing a phenomenal amount of change in terms of the way people work. People are looking for alternatives to email, things that work faster, smoother, things that integrate more software, and I think Slack does a fantastic job of doing that.
Now, Ellen, in terms of the mechanics today, we had a lot of questions about why they chose a direct listing. You talked to Stuart, I talked to Stuart, the CEO, Stuart Butterfield. Do you think we got an answer?
I think so. He was finally, now that the quiet period's over, able to explain that the main reason Slack was looking to do a direct listing was because they just didn't want to dilute their shares any further. They have a lot of cash. They feel confident that they don't need to raise any more money in the length of their lifetime as a company. And doing a direct listing allows you to do that, just allows you to go public, put your shares on the market, and not dilute by issuing new shares to sell.
So then why did they raise so much money up to this point? I mean, he has said things in the past, we have more money than we'll ever need, we've got money for a rainy day in whatever, 50 years. So why?
It must have felt worth it to him at the time. He said to me earlier this morning, we were always getting a really fair valuation. We found that capital was really available. And it's true, Slack has always been sort of a darling of the venture capital world, and I can imagine they were really able to probably negotiate the deals that they felt were really good for them in the private market and just don't feel a need to raise more.
I have a chart here in the Bloomberg which just shows how U.S. IPOs and U.S. Tech IPOs have been performing so far this year. So, Steven, you ran Office, you ran Windows, and one of the big questions about Slack is it just a nice to have? If companies are going to cut budgets, if there's an economic downturn, and there is a lot of macroeconomic uncertainty, why would they pay for Slack and not cut Office? Or why would they pay for Slack and cut Office? You know what I mean?
Yeah, well, I think, the thing about the workplace, and even during bad times, it turns out that the companies think about information technology as a way to invest in order to make it through the bad times. Your company becomes more efficient, you communicate better, you get more done, you serve your customers better, and that actually reduces the impact of economic cycles. And we've seen that for decades in terms of the way that technology investing looks. And I think in this case, Slack isn't really a nice to have. It's fundamentally rethinking the way that companies really approach the sharing of information and collaboration and work, and making it much more modern, moving from silos of email to an open communication platform.
Well, you know how corporate America can be, and Slack is cool, it's hip, and it's easy to use, and all of those things are great, but do you think more traditional companies will really see the value in it?
Well, they already do. You know, Slack has hundreds of paying customers with very large deal sizes, and they're already traditional companies that see the value in all of this, whether it's a Target or even an IBM, the sort of the most traditional of traditional companies. And so I don't think it's as much about seeing the value as much as the company embracing this idea of like, wow, we can really do better as a company, and that the tools that we use as a company are what can differentiate us to our customers or to our employees. It's a super competitive labor market, and we're raising this generation of employees now that are entering the workforce, that are used to instant messaging, that are used to lightweight communication, and they're also used to openness. And those are all the characteristics of Slack, not the characteristics of email.
Right, and in some cases, workers are much more responsive on Slack than they are on their corporate messaging services. Ellen, what are the risks, though? What are the challenges that lie ahead?
Well, we've already seen that Slack's revenue growth has slowed over the last couple years, down from about 110% a couple years ago to a projected 50% or so this year. So I think there are questions of what's going to help bolster that revenue going forward. You know, I had it explained to me that slowing is just, you know, the law of large numbers. The bigger that Slack gets, the harder it is to double its size every year, and that makes sense. But I think that's an ongoing question for the company. Another thing is, and Stuart, the CEO, has talked about this himself, trying to explain what Slack is to people who don't use it. It's a kind of a different category. It's not easily comparable to something that we've seen before. So
it's not just messaging. It's not just an email killer. You can share files.
Yeah.
You can have video calls.
And that's something that they just need to keep working on. So it's easy once you get someone to use it, but it's a little hard to make that first pitch when someone just thinks of it as something other people use.
All right, Bloomberg's Alan Hewitt, Steven Sinofsky, board partner at Andreessen Horowitz. We're going to listen to how they tell their story. I spoke with Slack CEO Stuart Butterfield and the CFO Alan Shim after the opening bell and asked how confident Stuart felt about the choice to list directly. Take a listen.
We'll see, but I think at this point it has been working exactly the way it was supposed to work. And ultimately, we'll open, we'll have a high and a low today, we'll close, and then the same thing's going to happen tomorrow and the next day and the next day, and we are very much focused on the long term.
Now, you're still paying large fees to bankers. You still raised a lot of money on the private market. So what problem are you really solving, Stuart, by doing a direct listing versus the traditional IPO?
Well, the first one is that no need to raise primary capital. We came into this process with over $800 million on the balance sheet, so the dilution to existing shareholders would have been tough. I think we did get a little bit more freedom in how we tell the story, so in addition to a roadshow, but instead of only having a roadshow in private rooms with the investors, we were able to do an investor day, live stream it, and make the video available to everyone, and that, I think, is put us in a better position.
Now, Alan, Slack is still unprofitable, and the markets have rewarded profits, even if they're slim profits. How far out is profitability?
Well, our primary focus right now is to invest in growth. And as we continue to build on what we think is a new category, that's going to be our focus for a long time. But we've also said to investors that our near-term priority is to drive towards cash flow break even. We have high confidence in the strong unit economics of our business that we can still invest very aggressively while driving towards that near-term profitability mark.
So then, Stuart, how much of a priority would you say that profitability actually is?
I think, I don't want to get too technical about it. In SaaS, there's a lot of deferred revenue, so accounting profitability isn't that much of a priority. As Alan was saying, bringing in more cash than we put out on an ongoing basis is a priority because it allows us to control our own destiny. The ideal for us, though, is that we continually find new ways and new opportunities to invest to further grow the business. So we don't need a lot of free cash flow, but just a little bit.
Now, Alan, revenue growth is slowing. What are some new sources of revenue you're expecting to tap?
Well, we're very pleased with the revenue growth. I think what you're seeing is also we're making great traction with customers, and we've gotten over 95,000 paid customers today. Our enterprise customers are also growing even faster, so we have 645 customers, over 100K in revenue. And I think what you're seeing is we're scaling. So at the base of revenue that we're at now, some of the revenue growth just mathematically will come down, but we're very optimistic about the opportunity. We believe there's a huge new category to be built and invested behind, so we're focused on that.
Now, Stuart, we've charted your progress from the very beginning. I went back into our archives. The first interview I did with you was in 2011 when you were CEO of TinySpec, and you were making a game called Glitch, which sort of became Slack. In 2015, Jared Leto crashed our interview. I will never forget that. Your employees, your users really love the sort of quirkiness of Slack, which is an ethos very much inspired by you. That said, you are becoming a public company. You are going to be doing earnings calls every quarter. How do you manage that transition with public investors holding your feet to the fire?
I think both Alan and I have been committed, and this is not a recent thing, but over the course of many years on building the kind of internal controls and systems that would allow us to operate as a public company. On the financial business operations side, that began a long time ago, and we've been working with the whole company to kind of transition in the limited number of ways that we do. I mean, we believe we can keep the same culture. We believe we can keep the same approach to serving customers. And if you think about our mission to make people's working lives simpler, more pleasant, and more productive, there's a nice humility to it because we do want to be of service. But there's also a huge ambition, and I think the challenge for us, or what we're going to have to pull off, is bringing investors along on that ride and help them understand what the long-term vision is and what we can truly do to support companies all over the world.
Now, you're entering a volatile market. We're in the midst of a trade war with China. You could imagine in an economic downturn that businesses are going to cut budgets. They might not cut email. They might not cut Microsoft Office. They might cut the nice-to-haves, and they might think that Slack falls into that category. Stuart, how big a risk is that?
I don't see any real risk in that. We have exceptional retention, so industry leading on both the enterprise side and the SMB side. Our customers tell us Slack is the kind of thing that they didn't know they needed, but once they have it, they can't live without it. And if you can't live without something, it's not going to be one of the items that are cut on a discretionary basis.
So, Alan, would you say, how much do these market fluctuations, how much are you following what's happening in the global economy?
Well, we watch it like anybody else, but it doesn't necessarily affect the way we run our business. We're building a new category. We have so many things to focus on, supporting our customers and building this ambition of a new way of working. So we control what we can control, and the markets do what they need to do.
Now, Stuart, analysts say that chat apps are a dime a dozen. You've got huge competitors like Microsoft, like Facebook, with deep pockets and billions of users. Over the longer term, how do you differentiate yourself? How do you compete when even you say in your own risk factors, you haven't figured out the optimal price because it depends often on what your competitors are doing?
At Slack, we say we are competitor aware but customer obsessed. And it's hard for me to imagine anything that any competitor would do that would cause us to change our plans when those plans are all oriented around creating value for our customers. So one of the things we want to do is put ourselves in a position such that Slack, the company, becomes more valuable as the world uses more software, because Slack, the product, becomes more valuable for each of our customers as they use more software because of the platform, because of the integrations. There's a whole world out there of other software. The number of categories continues to proliferate. The number of dollars that companies invest in software every year continues to go up. So in that kind of market, and in a world where we have 10 million daily active users out of the 200 million plus that we believe would benefit from Slack, it's just wide open.
All right, shares now indicated to open $32 to $34 a share, so we're getting a little bit higher. This means that investors, employees can sell their shares immediately. Alan, should we be worried about a brain drain? Should we be worried about a talent exodus once employees can sell with no lockup?
I think employees, like investors, they're appreciating how big of a category and opportunity this is. We estimate this addressable market to be $28 billion, and we're just getting started here. One where a category and a product and a hub that values adoption, user engagement, customer experience, as well as the platform that Stuart alluded to, which we think is going to transform the way people work in the future.
Now, Stuart, last quick question for you. You've been very focused on building a diverse team. Slack punches above its weight on women and minorities, though I know even you admit that you still have work to do. Unfortunately, other CEOs still don't think diversity is a priority. How has having a diverse team, having more voices in the room, helped you get to this moment, helped you improve the bottom line?
Well, I think that there's a bit of an increasing return dynamic. So the better job we do, the easier it is to take the next step. And so there's a lot of early employees, I think, who made really important contributions to the Slack culture, opened it up, and brought in people from their network. And that has allowed us to kind of continue, which reduces some of the resistance, because it can be very difficult if a company gets too big. So it's something that we're proud of. But you said we have more work to do. It's that doesn't end. We're part of the larger culture and the larger society, and we do what we can. My hope is that there are a group of people who graduate from Slack and go on to start other companies, to have careers at other companies, and kind of spread that way of working.
My interview there with Slack CEO Stuart Butterfield and CFO Alan Shim. And if you didn't see it when it happened, here is a picture of Jared Leto, the actor, crashing our live interview with Stuart in 2015. Me and Brad Stone there, pretty epic moment. And we recognized him with the sunglasses and the pink hair. And just a reminder, Bloomberg Beta, the venture capital arm of Bloomberg LP, is an investor in Slack. Coming up, Apple is pleading with the Trump administration to not proceed with tariffs on the iPhone. Details on the tech giant's letter to the U.S. government. Next, this is Bloomberg. Apple is urging the Trump administration not to move forward with new tariffs of as much as 25% on a new slate of products imported from China. The tech giant says the move would reduce the company's contribution to the U.S. economy and hurt its global competitiveness. The proposed tariffs would affect nearly all major Apple products, including the iPhone. Joining us to discuss, Bloomberg Tech's Mark Gurman, and out in Washington, Bloomberg's Sarah McGregor, who covers trade for us. So, Mark, I'll start with you. This is the first time Apple specifically mentioned the iPhone in a plea to the U.S. government, but are they asking for special treatment here?
Yeah, you're right. This is the first time they're mentioning the iPhone, and why that is so critical is because the phone represents 2/3 of Apple sales on the baseline, plus pretty much the rest of their sales because people buy the other products because they buy the iPhone. Are they asking for special treatment? Sort of. Basically, Apple is the most significant phone maker coming out of the US. It is pretty much the only company in this unique position of being such a global conglomerate that has such a stronghold on this market while also being an American company that produces pretty much everything in China. So in a way, they're asking for special treatment, but I think if this pass was granted to other phone makers, there's much smaller ones, they wouldn't be too upset about it.
We know, Sarah, that Tim Cook, the CEO of Apple, has been to Washington a number of times. He's met with President Trump several times, certainly made an effort to keep the conversation going. But if the administration does slap these new tariffs on this new slate of products, would Apple be an exception?
So exactly, Tim Cook was in Washington as early as last week, meeting with Trump, talking about trade, among other issues like immigration. So we do know that he does have the ear of Trump. He is able to get an audience with Trump. We also know that in previous round of tariffs, the draft list that was put together, Apple was able to get a couple of its products off it. So there is sway, obviously, that comes. Other companies have gotten other items taken off draft lists. Companies can apply for exemptions. So there are a whole suite of options at Apple's sort of behest or any other company to try and avoid these tariffs. That being said, I think the Trump administration really wants to hit hard, wants to make an impact with the $300 billion if it did move forward with them. So it's really hard to tell how much flexibility they're going to have.
Now, Mark, Apple comes up in almost every conversation we have about tariffs, but correct me if I'm wrong, they really haven't been impacted by tariffs on any products yet at all, right?
First of all, I wouldn't correct you if you're wrong, but you are not wrong. They have not really been impacted by tariffs at a significant level. There have been some accessories, some wireless routers that they don't even sell anymore, some old versions of Mac computers that they don't sell anymore. But the iPhone is really Apple's bread and butter, and it's really the core of this debate. We've been talking about, is the iPhone going to be impacted for a year? And this letter is so significant because this is the first time where Apple's coming out and saying, hey, you know what? Please, U.S. government, don't do this to us, right? Basically, they're saying that this is going to hurt, their contributions to the U.S. economy, but what it's actually going to hurt, truth be told, are their very high industry-leading margins for these types of products, and they don't want to sacrifice that.
So, Sarah, which way is the wind blowing at the White House today? I mean, what has Lighthizer been saying? What has the president been saying? What will be the result of the president's meeting with President Xi at the G20?
Well, I think there's probably two ways that things could go right now. One, President Xi and President Trump they both say, scheduled to meet at the G20. You know, best case scenario, they chart a path forward for talks to continue. You know, the talks have essentially broken down. The sides are not speaking to each other right now about a trade deal. The other path, I suppose, is for the Trump and Xi to not come to any sort of agreement. And if that happens, Trump has said he intends to move forward with these tariffs on $300 billion of additional Chinese goods. And you know, Lighthizer, the U.S. Trade Representative, was at a hearing on Capitol Hill this week, a few of them, and he spoke for hours. And, you know, one of the comments that he said that really struck me was that he said, you know, there is going to be some discomfort to get a deal with China, and that's going to happen right here in the U.S. The Trump administration doesn't think that the tariffs so far have had a big economic impact, a really negative one, either in the U.S. or around the world. But it does always, you know, it does sound like they do think that it might be worth trying to back China into a corner with these tariffs. They believe that China pays the tariffs. U.S. companies are saying, and that's what Apple's saying, that they pay the tariffs, and that's going to be passed on to consumers.
Right, and Apple is just one of many, many U.S. companies. All right, Bloomberg's Sarah McGregor and Mark Gurman for us. Thank you both. Coming up, Waymo is partnering up with the world's largest automotive alliance to explore more opportunities in driverless cars. Details on that next. This is Bloomberg. On Thursday, Apple recalled some of its MacBook Pro laptops sold between September 2015 and February 2017. The recall is due to batteries that might overheat and could pose a safety risk. This problem affects the 15-inch version of the older MacBook Pro. Apple said it will replace the batteries in these models at no charge. Waymo has agreed to explore driverless services with Renault, Nissan, and Mitsubishi. The car makers and Alphabet's autonomous vehicle unit will study market opportunities and research legal and safety issues related to driverless transportation services in France and Japan. And the city of Austin, Texas is looking better and better for tech workers. The cost of living is lower than in bigger cities and certainly much lower than San Francisco. And paychecks are getting fatter. Tech salaries in Austin grew faster than other major U.S. cities. They rose 15% over a 3-year period to an average of about $125,000. That's according to the recruiting platform Hired. Coming up in the public eye, we look at why cloud companies like Slack seem to be so beloved by Wall Street. We'll talk to one early investor who saw the cloud coming more than a decade ago. That's next. And later, Facebook is creating its own cryptocurrency, but a senator says not so fast. We're going to hear from Senator Sherrod Brown of Ohio, who's been speaking out. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Back to our top story, Slack's soaring public debut. The workplace software maker now has a market cap of $19.5 billion, bringing new meaning to that old saying that every cloud has a silver lining. Maybe in this case it's gold. 10 years ago, the market cap of public cloud companies was around $100 billion. Now it's closer to $1 trillion. Our next guest is no stranger to investing in the cloud. He's backed Twilio, Box, DocuSign, and more. Byron Dieter is a partner at Bessemer Venture Partners and joins us now. And you did not invest in Slack, so you are a
unfortunately correct
objective outside observer, which I like. So, what chances do they have in a market where you're competing with Microsoft, Facebook, and enterprise juggernauts?
Fun times in tech land, great to be back, and it's a fantastic company. So huge kudos to the team and the investor base for today as a milestone event. And the investors are reacting with greed appropriately for this business. They're paying 50 times run rate revenue for a quality business, and so the only hole you can shoot in it is what is fair value, but it's a heck of a company and well-deserved.
So look, I've used Slack for free in multiple different situations, and work situations, non-work situations, never paid for it. The company never paid for it. You often have teams sort of going rogue and using Slack. So can they get people to pay up? when you can get a lot of it for free?
So part of the beauty of these cloud models is that free becomes marketing. They don't need to have aggressive sales and marketing teams to go out in the wild when for very low marginal costs, they can entice users through this freemium offering and walk them through a conversion funnel in a very compelling way. A number of the cloud companies in the early IPOs ranging from Dropbox to Twilio have undertaken this method, and it works really well if you have strong product that gets that upsell dynamic building, and they have 140% net upsells, which shows the model's working.
How do they stand out or fit in to the cloud IPO market right now?
So a lot of people have been looking at this for a number of reasons. Certainly, they're a scale business, which puts them on a short list with the Stripes, with the Procores, Zoom, which recently went public, and PagerDuty. There had been this class of companies that people were watching closely. And also the way in which they went public, I think that this will change some of the mindsets in terms of the direct listing and whether that's a viable alternative. But there's still 55 companies behind them on the private side valued at over $1 billion today in cloud alone. And so there's a long list that the public investors are now looking at, hoping that they're to come shortly.
Was the direct listing a right call? Like, would their market cap be higher if they did a traditional IPO or lower?
I think it was an absolute home run for them, and huge credit. I love financial innovation in general, but the fact that they got the perception of the pop with this reference price and then the actual opening price, and yet they captured full value for shareholders,
right,
which
they didn't actually leave money on the table. We should be clear about that.
Absolutely. That $500 million spread between the reference price and the actual first trade was captured by employees and investors that were the selling shareholders into this listing. And so very few companies have attempted this, and it's a small class of companies that can pull it off in the current construct, but I think it suggests very good things for trying to do more of a market match for these IPOs as opposed to the pops that have happened for the other companies that went public this quarter.
So do you think we'll see more companies, tech companies, do that? Would you advise your companies to do it?
It's provocative, and yes. We were the largest investor in Pinterest, which was one of the big IPOs a few weeks ago. PagerDuty, Fiverr, we've had 5 IPOs at Bessemer this quarter alone. I think a number of them could have considered this. And looking ahead, I look at companies like Airbnb, I look at Stripe, and I've got to imagine that their boards are sitting around right now thinking, is this for us? And can we get the best of both worlds there?
Okay, so 10 years ago, you saw the cloud coming, and you wrote something called 10 Laws of the Cloud. This was in 2008. And that was advice for founders about how to start a cloud company. And obviously the cloud industry has exploded since then and is still exploding. So what are the laws today?
So I was an early cloud CEO and worked with Bessemer Venture Partners with some of our early investments, and it was a small group of companies then. 15 public companies in the entire cloud ecosystem that were public, and only a few hundred of any scale on the private side. You fast forward today, and there are 50 plus public cloud companies worth almost $1 trillion in market cap, and hundreds below them, private side, that are about to flip over. And what we've seen is that it's a much more nuanced world where they're getting much more sophisticated about product. Our earlier discussion about Slack, you see product-led companies now for the first time where the best product is winning, and you see very thoughtful metrics to unlock this high gross margin, very predictable revenue stream that investors love. You get the best of both with these companies. You get the high growth because of this generational shift in technology, and you get very predictable business models because of the subscription dynamics underneath the core customer relationship.
Now, the cloud sounds like a great idea, and obviously in many ways it is. It's the only way. It also increases vulnerability, I imagine, in a world where cyber attacks, threats are on every front. And so what is the biggest risk to the cloud that you see today?
So I would dispute the relative vulnerability. I accept the notion that cyber attacks absolutely are a threat to software and businesses in general. However, absolutely what you see is that a purpose-built application company that knows the attacked vectors on their software is much better positioned to defend it than a corporation with on-prem software installed running thousands of applications with all sorts of different attack vectors that they don't know how to protect against. And I absolutely would bet on Salesforce.com or Atlassian or Twilio to defend their software suite than a Fortune 2000 company protecting 2,000 plus applications trying to do a similar job.
Interesting. All right, and you're coming out with 10 new laws.
So we just published the 10th anniversary edition, which is really fun. We've worked with now over 200 cloud companies, and it's really those CEOs that have informed the thinking. So it is live on our website at bvp.com now, actually, today.
All right, well, I gave you an opportunity for a plug. You can check it out there.
Here.
Byron Dieter of Bessemer Venture Partners, thanks so much for stopping by.
Thank you.
Sticking with the Slack conversation, Ilya Fushman, partner at Kleiner Perkins, helped lead the first 3 investment rounds for Slack. He spoke to Bloomberg earlier today.
First of all, Slack is just an amazing company and brand that has a lot of recognition. The company has 10 million daily active users. So you can imagine that many people just heard and know of Slack.
Right.
The company also has a lot of capital that it's raised in the private markets. And so it didn't need to go out and raise incremental additional capital in the public markets. And for those types of companies, the direct listing is actually quite interesting because it allows you to transact very quickly. It allows you to set the right price, and it's highly effective.
Well, we know that they don't need to raise cash, but there is always a question with these tech companies about the path to profitability. As an investor, what would you like to see from Slack with regards to their path to profitability?
Well, I can't really comment on the future, but if you look at the category that Slack is in, software as a service, these companies typically have to make significant upfront investments in product and customer acquisition, and then can reap the benefits of that over time. So for example, Slack on average has a net revenue expansion of 138% annually. So that means that the revenue actually expands and grows organically within its customers. When you're at a scale of $500 million annualized revenue run rate, that's quite impressive.
So just in terms of how it came to market, Ilya, maybe a bit of a chill for investment banks here if this is a trend. Are there certain, in your view, types of markets or time in the market when a direct listing would work and others when it might not?
I think it's really hard to speculate on that. I do think it really depends on the company. Again, really well-recognized brands that have a lot of investor interest that can go direct. They don't need to be communicated or sort of put in front of investors. They're really well-known. They don't need to raise a specific amount of capital. They really want to just get access to public markets and transact. Those types of companies, I think, can fare quite well.
We have seen, and in fact, I don't know if we can show it or not, but there's a really great comparison of the FANG stocks versus the companies that have listed publicly this year. Most of them, of course, in IPOs, not direct listings. But the IPO market has just outperformed in a massive way, even those big tech names. Do you expect that to continue? There's such hunger for these kinds of the unicorn names out there?
Well, I think it's really exciting times in tech. You see companies like Slack obviously perform well today. In our portfolio, we have a company, Beyond Meat, that's done quite well. I think what's happening is there's real interest from investors to get exposure to tech, to get exposure to high growth opportunities. And again, the brands and the names that are recognized will get a lot of attention. And it's really obviously great for investors. It's great for companies. It's great for tech workers. It's great for everyone that the IPO window is so open right now.
Ilya Fushman there, partner at Kleiner Perkins. And a reminder, Bloomberg Beta, the venture capital arm of Bloomberg LP, is an investor in Slack. Coming up, regulators are already tripping over themselves to regulate Facebook's Libra, but the cryptocurrency isn't even launched yet. We'll discuss next. This is Bloomberg. This week, you couldn't have missed it, Facebook unveiled its Libra crypto project, which may launch as soon as next year. Partners include payment giants like Visa and MasterCard, as well as PayPal, but chatter and questions abound about regulation. Here's a look.
We welcome open conversations with regulators to figure out how to drive accountability and transparency for the Libra Association.
We know we have a lot of people to work with. We know this is a heavily regulated space.
Cryptocurrencies are still a very new and emerging technology. That's why it's important that we scrutinize them in the Congress and through our financial regulatory agencies.
A lot of it is getting the legislation right has been the real drawback, the real slowdown, not necessarily opposition from any one particular company.
We will wind up having quite high expectations from a sort of safety and soundness and regulatory standpoint if they do decide to go forward with something.
Senator Sherrod Brown of Ohio jumped into the fray almost immediately, saying there has to be oversight. He joined Bloomberg's David Weston earlier.
Facebook is too big and too powerful. I don't know that people would have said that 2 or 3 or 5 years ago, but the public increasingly believes they're too big and too powerful, particularly to engage in a risky cryptocurrency running a cryptocurrency system out of a Swiss bank is a big concern to people. So we want to, first of all, know more. Second, we want some rules around this. We know what happened to our banking system 10 years ago, and there's this collective amnesia in Washington about what Wall Street did. And we also know that the Trump regulators, I mean, the White House looks like a retreat for Wall Street executives. We know the Trump regulators are never as aggressive, aimed at big companies, whether they're Wall Street banks or whether they're Silicon Valley, as they should be. So we want to shine light on this, first of all, and then figure out what Facebook's trying to do, and then begin to move with the regulators to protect the protect the financial system and to protect the economy, especially in the attacks on privacy that we know Facebook is so well known for.
Has Facebook been up visiting you yet? We've heard that they've been talking, I guess, to the Fed. That's what Chairman Powell said yesterday. Sheryl Sandberg said they're talking to some people. Are they up on Capitol Hill? Have you had a chance to ask any of the questions?
They have lots of lobbyists, lots of people. I mean, they're a very powerful organization by any stretch in the economic marketplace, in the political marketplace. Far too much power with the White House. They've got to kind of get in line with Wall Street and others, and the tobacco companies and gun lobby at the White House. But it's a concern, and I think the public already has such skepticism about Facebook when it comes to protecting their privacy, because Facebook has shown interest in one thing. That's two things: being a bigger player in the market and making more money, maybe three things, and being powerful in the political system too. But we've got to make sure that people's privacy first and foremost is protected, and there's not much move in Congress to do that yet.
So, Senator, as you say, there's a lot of questions to ask, a lot of information to be garnered. But initially, do you have any thoughts about who or what is the best regulatory scheme for this? Because sometimes in Washington, as you know, I've seen you can have multiple agencies, and you'd think you get more regulation than that. Sometimes companies can slip in between the cracks. Is this a banking issue for the Fed? Is this a securities issue for the SEC? Is it a competition issue for the FTC? Who do you think should have primary lead on the regulation oversight here?
I don't know yet, because I don't know enough about what they're trying to do to run their cryptocurrency operation out of the Swiss bank account. But I do know that there is I'm skeptical of the regulators, because we've seen regulators already the Trump regulators already at the OCC and the Fed and the FDIC and the SEC. They've already moved towards weakening rules to keep banks honest, particularly the big Wall Street banks. So we've got to tread a careful path here. We want to, first of all, I think the role of the media is really important here, because all of you, I mean, to comfort the afflicted and afflict the comfortable, all of you shine a light on what Facebook is up to. Most of the American public doesn't know what running a cryptocurrency operation out of a Swiss bank account means to Americans, or means to a financial system, or means to your use of credit card or cash in an American store. I mean, we need to know so much more. So the role of the media, it's one of the reasons these hearings that Senator Crapo and I are calling on Facebook to appear at in July are so important, so the public really does learn what this is all about, and what threat that this company that never seems to be big enough, never seems to be powerful enough, never seems to be rich enough is up to.
Well, Senator Sherrod Brown, Facebook has clearly jump-started the crypto regulation debate with the announcement of its digital coin. Here with more, Bloomberg's Naomi Nix in Washington. And why is Washington suddenly kicking and screaming now, Naomi, when Bitcoin and crypto have been around for years and screaming for regulation?
That's true. It's a good point. I think what it indicates is, Facebook is a powerful company, and if they say they're going to do something, then I think Washington is going to pay attention to that. And unfortunately, at this time, lawmakers have a lot of concerns about Facebook and its operations. They're concerned, they're asking questions about whether the American public can really trust Facebook to embark on a project like that, given a lot of the data scandals and privacy lapses we've seen over the last year.
Meantime, Representative David Cicilline is one of the folks who has spearheaded this investigation into the tech industry. Of course, this antitrust debate is looming, and it is the House that has officially launched the first investigation. What have we learned about what the investigation will focus on?
In fact, Representative Cicilline made a speech about that investigation just today, where he, said we're really going to look at, are these companies being anti-competitive in their conduct? Are they acquiring their rivals and squashing out the competition? And are they doing it at the same time while hurting consumers' privacy? Are they taking, the proper control of users' personal information? And he took a really hard tone against Facebook. He said, Facebook repeatedly makes mistakes, and then the CEO will go on an apology tour, he said, and then they continue to engage in bad behavior. And so we can definitely expect that Facebook, whether it's this cryptocurrency or its other activities, will be the subject of this investigation.
Well, the House investigation will yield something very different than whatever the DOJ or the FTC investigates if they actually launch formal investigations. What does Cicilline actually expect his investigation to produce?
So Cicilline is looking, at a lot of things. One of the options on the table is that lawmakers might rewrite antitrust laws. One of the things they're concerned about is, are the laws that we have on the books to protect competition strong enough for enforcers to, push forward and protect competition?
All right, Naomi Nix for us in Washington. Naomi, lots more on this debate to come. I know you'll be covering it. Thank you. Still ahead, coming up, we will speak to a discount grocer that could hold some competition for Amazon after a splashy public debut. Another one. This is Bloomberg. Well, Slack wasn't the only company to go public today. California-based grocery outlet jumped as much as 43% after raising close to $400 million in an above-range IPO. The discount grocer spoke to Bloomberg's Emma Chandra about competing with the likes of Walmart and Amazon, as well as its plans to grow from 300 regional stores to 4,800 nationally.
It's been primarily a West Coast story, about 320 stores West Coast. We have an outpost in Pennsylvania. We're really hard-pressed to look across the U.S. and see a town that couldn't support a grocery outlet when you think about the values we offer, the service that we have that's delivered through the independent operator model. We just want to keep growing, but it's metered and measured. About 10% growth per year is what we're planning, and it'll take us a long time to get to that max potential of 4,800, but it's easy to see and look out that one day this could be a national story.
Now, you're saying that there is plenty of room for grocery outlet, but of course you are going public just as the grocery wars intensify. We're talking about the likes of Walmart, the likes of Amazon there, the big players there, but also a number of other established grocers. Are you concerned at all about where you will fit in, especially if you become national?
Yeah, no, we're not really worried about where we're going to fit in. We know exactly where we are. We're a niche player. We plan to stay in the lane that we're in right now. We've been in the business for a long time, and it's been very, very competitive. Walmart got in, Costco came in, all the dollar stores, Aldi. It's very competitive. You're right. I don't see it as any more competitive than it's been the last sort of 5 or 10 years. And our model of savings, the way we buy, the way we sell, is very differentiated from any other retailer. So we see a lot of upside for Grocery Outlet to continue to add stores.
Now, you say your niche is discount. You really are very much focused as a discount grocer. But are you concerned at all by the likes of the competition trying to move into that space? We know Walmart especially extremely focused on price. Also Amazon going that way, and others. We've been seeing prices for a number of grocery items fall. Also, a number of these companies are really trying to push the envelope when it comes to convenience, trying to ensure that their customers just go to them for everything, and that actually, therefore, customers will not shop around in many different grocers anymore, and that could be bad for you.
Yeah, we think it's really hard to be all things to all people. We think it's very hard to offer service, selection, price, convenience, all those things at once. I think that's a really hard proposition. So we'll stay and watch and see how they do, but we're going to be really focused on delivering the values that we have in the stores today, the customer service that we have delivered in small, convenient-to-shop boxes, and really stay focused on the business that we know and the business that we deliver.
Talk to me about how you might be incorporating technology. I've talked to a number of executives at the likes of Walmart, at the likes of Kroger and various other grocers, and they're all investing in technology to help improve the back office and drive efficiency. Grocery Outlet, by comparison, seems to be rather low-tech.
Yeah, well, I would say we're not showing you all the tech that we're employing. We're using all the most modern tools that I think anyone else is. Because we're small and we're not quite at scale of Walmart, we're not investing the billions that they are. But we have adequate technology. We have really good business insights. We're providing all of the merchants out in our stores with a lot of data about how they can order better, make better decisions. We're tracking all the product through the supply chain from start to finish. And then lastly, I'd say on the digital front, we're quite modern in how we're employing, being able to talk to the customers on a one-on-one basis about deals that they care about and things that they want to hear about. So, we're really happy with the technology we've got. I'm sure it does not compare to the likes of Walmart, but it works really well for Grocery Outlet.
You said you're not using machine learning or AI now when it comes to data. Do you see that as being something that you will move towards as you grow?
I think the whole world's moving towards it, so we will. We're not fast followers when it comes to technology. We watch and see where sort of things settle out. So I would say yes, just no plans to do it right now.
Eric Lindberg there, Grocery Outlet CEO, with our own Emma Chandra. And that does it for this edition of Bloomberg Technology. As always, you can find us on Twitter. You can check us out at Technology. And be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.